Hello friends, welcome back to my channel Technical Analysis Made Simple. In this video, we will be discussing about global market chart analysis, domestic market chart analysis, and we will also discuss the FII data. Then we will form a view for next week and we will analyze nifty heavyweights here. But before we start off with the analysis, I would like to tell that you can connect with me on Twitter, Facebook group, or Telegram channel. My Telegram channel is currently having 35 subscribers only, as it is a new one. Here I actively share my trades and keep updated on them. Make sure that if you join this, then it will consist of my personal trades, and any trade that you take will be your personal choice. I also keep posting on Twitter, and you can also be connected on the group. Now let's start the analysis. So with respect to global markets, there are two events that are important. The first one is $1.9 trillion stimulus in the US. This is an overhang, but it looks like it can be passed in this weekend. And this was the reason why Nasdaq, S&P and Dow, they bounced from lows on Friday. They were almost about to break down, but then there were news of stimulus and then it bounced. The another point is, which is an overhang on market, is the bond yields. They have shot up above 1.57. Now this is concerning, and we will discuss more on this when we look at the chart of US 10-year bond. Let's start with Dow chart. If you see, Dow is moving in a rising wedge structure and it is still holding the trend line. However, now the wedge has become very narrow. If you see, there is a clear volatility contraction here. Buyers were here, and buyers were here as well. However, every time the selling candle was comparatively smaller. Here, if you see, we are almost at a brink of either a breakout or a breakdown. For now, I would like to see this structure as a range between 32,000 and 29,600. A breakout on any side will give a swift move. A breakdown below 29,600 will take towards 26,000, but 200 moving average can give a support. So lower side is more as compared to upside, but if there is a breakout on the upside, there can be a swift movement. So we need to watch this very carefully. Nasdaq is pretty concerning. If you see, Nasdaq has already broken the structure that started from March low. If you see, the trend line is broken with a head and shoulders pattern. Now head and shoulder target comes out to be around 11,500, but 200-day moving average is right now at 11,800. So I would not be surprised to see Nasdaq touching 11,800 in the next week. The reason is very clear. See, after a breakdown, there always happens a retest. This was the retest candle. The retest of this trend line is already done. Breakdown, retest. Now, breakdown, retest of this structure is done. If there is a further downfall, then 11,800 and 11,500 are on cards. So keep an eye on this. This trend will change to upside again only and only above this high is taken out, which will be somewhere close to 13,000, 13,100. Now this is S&P chart. If you see, S&P chart has also broken down from the trend line that it was following from March lows. However, this trend line is not convincingly broken. One another structure that is forming here is a falling channel. If again sell-off comes here and it fails to break the highs, then much lower levels can be seen, but the immediate one is 3650. Here also we are in a range of around 350 points from 3650 to 3970. Consider it as probably 4000, but we are in a range of 3650 to 4000. Let's discuss gold. So if you see, this was the demand zone that we are following from a very long time. If you go and see my previous videos, we were discussing how price was bouncing from here. Now gold is in a clear bear market because it is continuously forming lower lows and lower highs, and it is traveling in this falling channel. One demand point that it is reaching here is around 1660 or 1668. If this is taken out, the next stop for gold will be around 1600s. So long-term investors can look to accumulate around this. Safe investors can wait for 1800 to be taken out again with good momentum, and then they can plan for a trade towards 2071, that is the high. So let's see how this pans out. But gold is falling because dollar is rising and bond is rising. So a sell-off on dollar and bond will be positive for gold. So keep an eye on these three parameters. Now this is DXY chart, the weekly chart. I have plotted Nifty chart here, and let's discuss why that is important. Last time when DXY bottomed and rallied here, you can see Nifty was in a range bound condition and then finally it crashed. After this crash, when Nifty bottomed out, or rather we can say when DXY topped out, then Nifty made a bottom. There was a continuous rise here, there was a continuous fall. Now again DXY is trying to break out. The first target will be 95, then 97.5 and followed by 100. If it reaches 100 again, most likely we will come back and test at least this breakout point, that is 12,400 on Nifty. So this DXY is very important as of now. Now let's discuss about bond yields. If you see bond yields, so now what is bond yield? Bond yield is the rate of return that a person expects on a 10-year bond. Okay, so now the bond yield is close to 1.57. The next target here that comes, or the next resistance point, is around 1.95, or let's say 2%. Now I pulled out this chart and it shows that S&P 500 dividend yield, that is if you are a long term investor or if you are a mutual fund investor where fund houses mainly are active, if you see the dividend yield from that is around 1.53%. Now imagine if bond yield is more than equity market yield, then there will be a panic selling in equity market where the risk is primarily more and money can flow into bond yield bonds, I'm sorry. So this is the primary reason why rising bond is not favorable. Apart from that, if bond yield rises, then inflation rises, and which results in higher interest rate, which results in higher cost of lending. So these parameters are very important as of now. So these three parameters we need to keep in our mind, that is DXY, gold and US 10-year bond. So keep an eye on these. Until unless there is a clear picture, it is very difficult to plan a trade here, or it is very difficult to plan a long side trade. Any bounce will be sold off. Now imagine if this keeps on moving ahead and reaches 1.9. There is no point for large investor or mutual funds or hedge funds to keep invested their money into S&P index funds. They will pull out their money and it will flow into bonds because they are getting safe interest of 2%. So this is very crucial and this is very important going forward. In any case, if 1.3 is broken on the lower side, then there will be a huge rally in global markets. Now let's discuss the FII figures. So if you see, after September, FIIs were continuously buying and they had the highest figure, one of the highest figure in February, that is 42,000. If you see the current month, it is net positive, but then there were two continuous days of selling with 5th March, that is Friday. Then FII sold around 2000 crores. This is a significant amount. So we need to see how the rest of the month goes. If there is a negative month which happened in September, we need to be very careful here. Now let's discuss Nifty's chart. So if you see, this is the September candle as we were speaking about it. When FII sold most, then the market bottomed out. So this means that charts will give you an advanced indication. Okay, regarding the structure, it is following this rising channel since March. The trend line is very far, so we can say that Indian market is actually outperforming global market. We just saw the US market charts and they have already broken the trend line or very near to the trend line. Now, if you see this upper small channel or the supply zone, it has always given a supply 1, 2, 3, 4, 5. Now here also it is facing some resistance. However, this is like an inside candle, not an exact inside candle as the high is above, but this is like an inside candle. So here now the high and low become very important for the next week. If the high is taken out, the last high will be tested for sure, and probably we can also go towards making a new high towards 16,500. If the low is taken out, I think this low will not give any support now and it will fall towards this trend line, which is around 14,500, and if this does not hold, we will fall towards 14,000 or 13,800. So keep an eye on this weekly high and low. Just monitor the weekly high and low prices. Whichever side the candle breaks, there will be a good momentum. Regarding Bank Nifty has also been following this trend line and it is now moving in a downward channel. So, if it keeps continuing following that, then it can reach this trend line, test it, and then probably give a breakout. A test of this will be very near to the test of all time high breakout. So, banks can still consolidate, there is a scope. The candle here is a perfect inside candle, and hence the high and low of this candle becomes very important. Whichever side there is a breakout, there will be a momentum, and lower side is more dangerous here. Let's discuss some of the nifty heavyweights. So first one is Reliance. Reliance has given a clear breakout now and probably it can consolidate over this channel, but then 2291, that is 5% from here, is very much possible in Reliance, and Reliance can do the job of holding Nifty steady. If Reliance makes a U-turn, that will be very bad for the markets. But I think 2291 should come now. This is a strong breakout candle. This is HDFC Bank. This kind of trend probably you people. This is HDFC Bank, and probably this kind of trend you would not have seen earlier. But markets do tend to follow a structure like this. So here, if you see, it is continuously consolidating on lower volumes. There are no higher volumes here. So I would expect it to come down, test around 1500 and then maybe shoot up. If it fails to shoot up, it will go down towards 1400. So keep an eye on this as well. However, this is not very positive. Next is TCS. So if you see, TCS is also following a well-defined channel since March lows. Now from this touch point, there was a good selling pressure. And if you see, the volumes were also increasing. The last candle do not have a very good volume here. Now 3098 or let's say 3100 becomes an important resistance here. Here also we have a good inside candle. If TCS fails to hold the weekly low, which is around 2901, there will be a good downside towards 2600. But if next week gives a breakout above 3100 with a strength candle, then 3350 is on cards. So if you are a long term investor and you are planning to accumulate TCS, either accumulate it above 3100 or at 2600. Right now it is a not good place to accumulate because this is a confusion. So let's see what happens next. Now this is HDFC. If you see, HDFC has broken the trend line. We just saw in Bank Nifty it is not yet broken, but HDFC has already broken it. This is underperforming. HDFC will test 2457 levels in the next week, and then probably it will go into a consolidation here. So HDFC is not a buy at these levels. Probably long-term investors can think about accumulating, but keep an eye on this. If it falls below 2450, then there will be more weakness. Now Infi has a similar structure to TCS, but it is a little stronger than TCS. If you see, TCS has continuous red candles here and green candles are smaller. If you see Infosys, it had one red candle with low volume, and then this green candle is also engulfing the last week red candle. However, the closing has not yet come above the last swing, which was 1328. So wait for a breakout or breakdown here. This is a tight range and I am expecting a break on any of the side next week. So keep an eye on this. If it breaks towards the lower side, you can see levels of around 1150, and it will be a good short trade also because there will be around 90 to 100 points of downside. If it breaks above, there can be fresh buying seen here with good volumes. So now what is the take for next week? I feel that correction can continue, and the high and low of this week is very important for all the indices and stocks, up especially for the index stocks. So keep an eye on them. If you have any favorites or if you are planning to accumulate some stocks, keep an eye on these weekly high and low. If the low is gone, then the next support will most likely come, and there you should plan to accumulate. If the high is gone, you can go and back and buy. Global indices are forming a topping structure, so that is also very bad for the markets. Dow has been completely compressed. So after 1 or 2 weeks, there can be a big fall or a big rise. We need to wait for that breakout. Next week is very crucial to form a concrete view. This is because there is so much indecision in the market. We need to see how things pan out. The bond yield and the DXY, they are not looking good. If they keep on rising, then market cannot go up. All of them cannot go up at once. So keep an eye on them, and yes, keep nailing profit as and when you get it, because that is very important. Paper profits do not count. If you are a short-term trader or a mid-term trader, you need to book your profit near the tops. I'm not saying market will crash from here or top out from here, but then again, the stocks which have risen a lot, they will see good selling even on a small panic condition. So keep an eye on those and take proper steps. That's all for this video, guys. Thank you so much. Please like and share.